Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, a responsive strategy to market downturn, and De Beers says consider cross-border diamond beneficiation. The continued downturn in commodity prices has affected mining operations globally. However, Avenger's mining division has deployed responsive strategies that will sustain its operations during these trying times.
Commodity prices, I don't think there's a single commodity that hasn't been affected by the downturn, and we with that, I guess, have also been affected. The difference though is that our revenue stream is not dependent on that market or commodity pricing. So we sell tons, we mine tons, we pay per ton. We mine cubic meters, we pay per cubic meters. Whether it's project work in shafts and underground, we pay according to a bill of rates. However, that said, so our revenue stream is not directly linked to the commodity pricing. But that said, clearly we work with all our clients in the current market to see how we can reduce our cost base. And we've got lots of initiatives on the go at the moment with numerous of our clients to see how we can reduce the cost base. And it's quite amazing how in times like these, how a little bit of inward reflection, a little bit of inward focus on the business, the savings and initiatives are there to be had. What we don't want to do is we do want to protect our margin. It's not a case of our shareholders subsidizing our clients' shareholders. It's about how do we reduce our cost base. So the weak rand, I think, for a while, sheltered us in this part of the world, but unfortunately not even the weak rand price could protect this industry or this sector against the global downturn in commodity prices. Obviously the global economic environment has also had a role to play in the general downturn. Operating cost pressures is what I'm talking about. It's true of all the operations we're working on, but I'll talk a little bit about us engaging and working with our clients to find ways of overcoming these challenges. And there are limited number of new opportunities out there, but I say that in one breath and I almost take it away because, yes, there are fewer opportunities, but it's not to say that there are absolutely no opportunities. In fact, we've seen quite a few opportunities coming, for us to look at. They are tightly contested, but that doesn't mean that there are no opportunities. So down to the specifics. So, the single biggest condition that's we're alive to and is a challenge for the business, but not insurmountable, is the continued downturn in the commodity market. And then the other one, which is more local than international, remember we're in an international business, is industrial action, or as it's now known, employee relations. I actually prefer the term employee relations as opposed to industrial action. Industrial action is a term that sort of originates from, dare I say, the 80s and the 90s and possibly the old South Africa. We talk about employee relations today. So impact on the business in terms of the downturn, there are lower activity levels, but there are opportunities, and I'll talk to that. Pressures from customers to lower production costs, I've mentioned that. A lot of work being done across the business to find ways of reducing the actual costs, not eroding margin, and then contract cancellations, which is a threat to our business. But I'll talk to how we mitigate that. So let's talk specifically to these conditions. So retain existing work through close customer contact and ongoing superior performance. There's nothing, absolutely nothing in our business that can erode or take away from just pure performance. Now, performance in our business is measured in terms of production and is measured in terms of safety. Those are two of the single biggest KPIs in our business in terms of our relationship with our customers and our clients. If you perform in terms of production and you perform in terms of safety, it goes a long way to cementing a relationship. Having that relationship, we can engage with our clients on a very mature basis to try and find ways of reducing the mining costs. This cooperation that we enjoy with the clients, we also extend to our suppliers. There's no point in us being the meat and the sandwich, taking the pressure to try and reduce costs if we carry it all on our own and we're not engaging with our suppliers for those same initiatives to see how we can reduce overall costs. Portfolio diversification. And there's a slide further on that talks to the diversification in this business. It's quite important. Well, I would say maybe not in the current market, but certainly if you go back sort of 2-3 years or so, you quite often found that one or two commodities might be down, but the others were maybe not quite as badly affected. We are in the perfect storm today, I think, where all the commodities have come off. But if you look back 2 years ago, I mean, gold was still trading at the upper $1,500, $1,600, $1,700 an ounce, whereas some of the other commodities had actually come off. And then employee relations. Now, employee relations is just absolutely key to ensuring a harmonious workforce. And if you can build a relationship between yourself as the employer and your employees, who are one of your most important stakeholders, you would go a long way to, I'm not saying that you will completely eradicate or mitigate against industrial action. However, I can tell you that if I look at the two businesses that we've got, Morgan's has enjoyed a relatively trouble-free period, or possibly 5 years plus, where we've not had any form of industrial action. Shafts and Underground, unfortunately, in more recent times has had a bit. But between the two businesses, what we're working towards is to embed a single ER climate across average mining.
South Africa should not forego the collaborative diamond beneficiation opportunities that lie within the SADC region.
We need to consider how we can leverage partnerships across our borders and not forgo the opportunities that lies within the SADC region. We have a number of producer countries such as Namibia, Botswana, Angola, Zimbabwe, and Tanzania within close proximity with similar aspirations regarding beneficiation. We need to consider the benefits that we can derive as a region and individual countries if we collaborate to establish SADC as a beneficiation hub.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.